Hi guys, in this video I'm going to cover the content of BTEC Level 3, Unit 3, the types of income, which is part of business finance. Now there are two types of income, capital income and revenue income. Let's look into the first one, capital income. So what is capital income? Capital income is money that is invested by the owners and is used to set up the business or buy any equipment. And is used to buy equipment that is going to stay in the business for a long period of time, which is also known as fixed assets. Now, an asset is any item of value that is owned by an individual or a firm, and a fixed asset is equipment that a business is going to buy and it's going to be in the business for more than a year. So, for example, machinery. Now, the types of capital income are loans, mortgages, shares, owner's capital, and debentures. Now we're going to look into each one of them. First one, what is a loan? A loan is an amount of money that is lent to a business from a financial institution. It is a lump sum and it has to be paid back over a set period of time. There will be a monthly interest payment that will have to be paid, and the loans are going to be secured against an asset. What are mortgages? A mortgage is a large sum of money that is lent to an individual. They will be paid back over a long period of time, around 25 years. Mortgages are always secured against an asset, for example, a house, and it could be used to buy a house or a factory, etc. What are shares? Shares, a shareholder are owners of the business. They all contribute towards the income of the business. Shareholders are going to receive a voting right, and that's because they have a share in the business. The more shares a shareholder has, the more power they have over a business. Shareholders are given money for their investment, which is known as dividends, which is their share of the profit. What is owner's capital? Owner's capital is money that the owner will invest into the business from their own personal savings. So a sole trader is a person who owns a business on their own. So they find their income from their own personal sources. Whereas partnership is when two or more people are going to come together and set up a business, and each partner will contribute towards the income of the business. What are debentures? Debentures are a medium to long-term source of capital income. So large companies will often use them to secure their income. The debenture will be paid back in a lump sum on an agreed date. And they can be used and they will be secured against an asset. What is revenue income? Now, revenue income is money that will come into the business from day-to-day activities, such as selling goods or providing a service. Now, the types of revenue income are sales, rent received, commission received, interest received, and discount received. I'm going to go through each one of them in detail. So what are sales? Sales is money that comes into the business from the selling of goods and services. They can either be money from when the customer pays there and then, which is known as cash sales, or it can be credit sales when the customer buys and then they will pay later. What is rent received? Rent received is a business that, for example, if a business owns a property and they charge others for the use of that property, they will then receive rent from the individuals that are using that property at that period of time. That is known as rent received. What is commission received? A business can sell products on behalf of another business. For each sale they make, they will get paid a percentage on that sale, and that percentage will be called commission. What is interest received? It is money that is earned on savings and lending. So if a business has a positive bank balance, they will then receive interest on that bank balance, and that will be part of their revenue. What is discount received? Discount received is when a business is given a percentage of a sale. So for example, if they buy a bulk order, then they would then reduce the cost. They will then get a discount, which will then reduce the cost of the business. That's known as discount received. Now, hopefully that helped you understand the difference between capital income and revenue income and the types of capital and revenue income. You can pause this video and have a go at these practice questions to test your knowledge. If you liked this video, then give it a like. If you want to see more videos, then subscribe. If you want to see updates on videos and resources, then check out my Instagram. And if you want resources to this video, then check out my test shop.